right. So again, I want to say thank you and greetings for everybody coming out today for Haggai chapters number 14, the truth about home ownership. My name is Stephen Baird. I'm the excellent high priest here at Haggai chapter number 14, out of the most excellent Prince Hall Grand Chapter of Royal Arch Masons for the jurisdiction of Michigan, where the Honorable Stephen Colford Jr. currently serves as our most excellent Grand High Priest. So going about what we're looking at today, the goal is to have a couple mortgage professionals have a very in-depth and honest conversation with our community about what it takes to actually be a homeowner. So what I'm gonna do right now is introduce our panelists of who's gonna be to help us out. Starting off first, I have a good friend of mine, the guy that sold me my house, David Malcolm. If you want to introduce yourself here, sir.
Hello, brothers. My name is David Malcolm. I work with Charles Reinhardt Realtors. I've been a realtor for 15 years. The last 5 years, I've won the Charles Reinhardt President's Club Award. I am able to sell you homes in all 50 states and over 60 countries through my affiliations. I've been doing this a long time. And I'm happy to help in any way I can. I'm pretty sure throughout the night, you get to know me a little better through your questions or whatever. I'm not one to talk about myself a lot, but whatever questions you have for me, I'm here to answer. So.
Thank you so much, sir. Now going over next here. Now the guy to help me refinance my house to get some things done, Brother Brian Cook, if you want to go ahead and introduce yourself.
Hey, good afternoon, good evening, brothers. My name is Brian Cook of the Jimmy Lunsford, number 45, Prince Hall Masons, Detroit, Michigan. I've been a mortgage banker here at Quicken Loans. This year will be my 10th year. Licensed in 36 states. I handle purchase, refinance transactions all across the country. So honored to be here, honored to be able to help, and thank you for the opportunity.
Thank you much, sir. And then my good friend, it helps me always keep my credit on point. Manny Callahan, if you can introduce yourself and a little bit about your background and what you do here too as well.
All right, thank you for extending this offer, Stephen. I'm one of Stephen's fraternity brothers. I also do work at Quicken Loans. I've been in the mortgage industry for about 10 years as well. I've worked all the way from the front end side in sales, being a loan officer, all the way to the back end side of things, doing post and pre-funding audits for our investors as well. So I have a myriad of, experience, from the inception of, you looking to buy a home to the actual end where we are selling those loans to the secondary market and making sure that we're complying with investor guidelines.
I appreciate it so much, gentlemen. So just so you guys can get a painter view, because they're going to be really humble with this. But normally, I think between these three individuals, probably close to a couple $1 million a year easily, probably close to $50 to $75 million worth of process that they go through every single year between the three of them. So we have a well-educated bunch of individuals on this phone call. So without further ado, I'm going to jump right into it to give why we're here. So I'm gonna ask for all three of the panelists, and I'm gonna start off with Malcolm from Purchasing Home. What is literally the one thing that you see first-time home buyers do that's always a mistake? You're like, hey, please don't do this. This is just literally, this is the worst thing you can do. Don't do it. Like, what is the one of the first things that you see that you can advise people to work on to know when they're getting ready to purchase a home?
I think that the real estate world is like HGTV. It's not. And you have to be ready. Nowadays, we live in a really tight market here in Southeastern Michigan, and I don't care where you're buying at, you have to be ready. If you see something you like, you need to be the first one in. Most of the time, you need to be the first one with your offer. You need to make sure that you're working with your lender the best way you possibly can, and also have a lender that you can communicate with at the drop of a dime, and you just have to be ready, man. You got to have all your ducks in order when you're going into this, or that house you like may go to someone else.
Gotcha. Thank you. Brother Cook, from the side of doing the mortgage sides, what's one of the things that you see that they run into that you're like, hey, for like a first-time home buyer, even sometimes a veteran buyer, that they need to be aware of going into these transactions?
Yeah, I think Brother Malcolm hit it right on the head when he said being prepared and being ready. A lot of people will not have their finances in order. They won't have their credit in order, first and foremost, and think that, you know, they can just go get a mortgage without credit. I think the credit aspect of it is big. People don't understand how important credit is. They think that, you know, just because I've got, you know, $50,000, $100,000 saved up, that I can automatically get a mortgage or I can qualify for whatever I want. But that credit is the big part. So I would say at least probably 30 to 40% of the people that I talk to on a daily basis, especially our people, the credit is not where it needs to be. Nobody's ever talked to them about credit. Nobody's ever helped or coached them or told them, you know, how important credit is. So a lot of times people try to buy a house and it's the first time that they ever hear that you need credit, which is a sad thing. So I would just say credit, being prepared, just having those things in line are the most important parts.
Now, Manny, I'm gonna lob this up to you because I know you did a lot of work in underwriting. So when it comes to credit, what are some of the things that you've seen that like people have made mistakes on, or something that you can help out, like easy things that they can improve the credit, or some tips that we can share with them?
Yeah, of course. Like to reiterate, like Brother Cook said here, credit is very important. So even just taking it one step back further, the history of credit, you know, knowing what things you can get to report on your credit to establish a history, because all this is a lender looking at your history of repaying debts. And if you don't have a good history, it's going to be very hard for them to make a qualified risk assessment to show that you're able to repay this loan back. Nowadays, there are a lot of programs and things that can help you get additional resources to report certain things on your credit. So look into those things. They can utilize your phone bill, you know, history, or your other utilities that aren't as popular on reporting. So look at that. Also, you know, credit cards, looking at specific ones. There's even prepaid credit cards that you can have that are reporting on your credit as well. So there's plenty of other opportunities besides traditional trade lines, credit things that can report on your credit that can help boost your scores as well. Another thing from the standpoint of you know, history in general, the earlier you can start you know, establishing a credit history, the better. Having 1 or 2 years is not enough. You know, lenders, and especially, you know, credit bureaus, they like to see a lengthy history of you know, credit reporting with no missed payments and stuff in general. And then if you do have blemished credit, that's not an issue. I think the biggest thing is getting with a knowledgeable person, understanding, you know, how your credit works, to basically remove some of those blemishes. A lot of times you can get articles of deletion if you work with reputable credit repair companies, and they can remove that stuff completely. So it will start to boost your scores significantly. But I am not a true professional in that area. I would just say seek out somebody that you trust and that you you can confide in and see a professional if you need help with cleaning up your credit. But I would always look at, you know, not paying those things off, but paying them off and getting them completely removed from your credit. It can help substantially boost your credit if you are in need of, you know, raising your scores to qualify for a mortgage.
Thank you. That leads us up to like a really good spot that I think a lot of people, unfortunately, because in our culture and our society, we're not taught about credit a lot. So when we come down to getting ready to purchase a home, we might not have the most stellar of credit. So Brian Cook, real quick question for you, sir. Just in your experience.
Before we proceed forward, I think Brother Spears may have had a question. I'm not exactly sure. Did you raise your hand, sir?
Yes, I have. Do you have anybody that you recommend, companies that we should use to clean our credit up?
Not off the top, but I can take that offline and research some information, and I can follow back up with you through Steven on that. Okay.
Brother Malcolm, the floor is yours, sir.
Brother Spears, some people may disagree with me on this. I have a serious problem with credit repair people. I don't, when I hear it, it makes me itch sometimes, because you can repair your credit for free. If you're a member of a credit union, you have organizations like Green Path that will do this for free for you. So if you have a membership at a bank or a credit union, walk into your bank or your credit union and tell them, hey, I want to purchase a home, I want to purchase a car, I want to purchase a boat, or whatever it is. They will run your credit report, and they will sit down with you, and they will help you get your numbers up so you can purchase those things. They want to loan you the money. So be leery of people in their credit repair. The worst thing that I ever see is people saying that they're credit repair specialists and they got bad credit. You can't repair my credit if you don't have no credit. So go to a reputable institution like your bank or your credit union or Green Path, and they can help you do that. Somebody might disagree with me, but I'm just saying, you got to be careful who you give your social security number to and pay $1,000. If you got to pay for it like that, it's probably not worth it.
Yeah,
that's well said.
Yep, and I think a lot of it too, what he said about someone reputable. Look, a lot of these people, and I when we pull these people's credit, like I see it all the time of like, hey, I was working with Lexington Law, or like I was working with so-and-so credit repair agency, and they don't really repair your credit. They just go in and just dispute everything that's on there, which is fine. I mean, it temporarily inflates your credit, but when you go to get a mortgage, those disputes have to come off. So, you know, you'll see somebody and they'll have 10 disputes on their credit, and they're like, yeah, I've got my credit from a 530 up to a 700. Well, really, you don't. They just put a temporary fix on it that has to get removed anyway when you go to get a mortgage. So it's spot on with what David was saying. You want to go to somebody reputable. Oftentimes, lenders will have their own internal credit team. So for instance, like Quicken Loans, we have a team called Fresh Start, where it's free. There's no cost or no fees or anything for it. But they will help you get to the next level of your credit for literally no cost or no fees or anything. So you want to make sure that if you do pick somebody else that's just out there, make sure, one, they specialize in mortgages, and that they can actually help your mortgage credit score, your mortgage score to increase versus just a consumer's report or just disputing a bunch of stuff.
Hey, this is what we're here for. And also to point out something, David, like, shoot it up. Let's be honest. This is supposed to be a truthful conversation about this. So we're going to give our experiences. Now, one thing that I want to bring up is because, again, like I said, our people sometimes don't have the best of credit. So I've heard stories of people being able to buy houses with like 500 credit scores or something in that range. So I'm gonna start off with you, Brian Cook, if you could speak a little bit more onto that. And then if anybody else on the panel have something to add after Brian Cook, let's go ahead and talk about it. But even if you do have a 500 or maybe like a 580 or something like that, does that exclude you from buying a house, or what it would take then to get you to get a home?
Yeah, it doesn't necessarily exclude you. So I know at Quicken, we require at least a 580 for like our FHA programs. So if your credit score is above a 580, there's some other things that you need to get to or have in line, such as assets, debt to income ratio, all of those things. But just because your credit is poor doesn't mean that, you know, there's no financing options. So for instance, my wife is a real estate agent too, and she always calls it like dating. You have to date lenders because each specific client might not fit with one specific lender. So she, for instance, has clients that or lenders that can go with a 500 credit score, or that can go with a 530, where a traditional bank might not be able to help them. So I think that there's different solutions and different fixes for everyone. And I think a lot of people don't need to be discouraged just because, oh, I don't have a 700 or 800 credit score. You know, it doesn't necessarily mean that you can't ever purchase a home or you're not able to purchase a home. You just got to do your research, find the right company that fits your specific niche or your specific need, and that will work.
Like I said, I found out it was very shocking for a lot of people that like, hey, you can go at that point. Now, David, quick question for you. When you're going out and if somebody's looking to buy their first home, how are you having the conversation with them about expectations of what they're going to get in this home? Because I know that everybody, like you said, everybody's looking at HGTV and everyone wants to come in and say, you know what, that house is not worth $200,000, it's worth 160. Like, how's that conversation going for you? What would you tell the people right now that are like looking to buy their first house to give them like realistic expectations on that process?
Well, unfortunately, right now it sucks to be a buyer, and that's just a fact. When you have a house that goes up on the market, and within the first 48 hours you have 30 showings and 8 offers in the first day, it's a very challenging time now, especially if you have an FHA mortgage. There's some things that you can't do that people with cash and conventional lending can do. You know, you have appraisals that come in there that could cause problems because people are at this moment. I'm writing offers that are well over the asking price with appraisal gaps, and you just have to be very creative and crafty in your offering right now. And first-time home buyers are seeing that they're losing a lot of deals because they want to go in and, oh, well, let's negotiate and see if they'll take $20,000 less. It's not going to work. You know, at this time, that's not working for first-time home buyers. So I just try and be realistic. I mean, I tell people what they need to know and not what they want to hear, and hope that they listen to me. And if they want it, you need to go get it. Your realtor has to have great relationships with other realtors. He has to be able to communicate with your lender. I have lenders that, I mean, we talk 11 o'clock at night. If I text them, I have what I need by 7 in the morning. You know what I mean? So I can get my day started and do what I need to do. It's just rough right now for buyers in the market that we live in. And I don't care where you're buying. If you're buying in Wayne, Westland, Detroit, Ann Arbor, Dexter, it doesn't matter. I sell all over the place, and it's kind of tight for a lot of people. And you have to, everything you want, you may not find in that home. You know what I mean? You might have to buy a home and make it what you want. You know, the more you put into a contract, the more you shrink the pool and your buying power. You know, the more contingencies you put in there, the more you shrink your buying power. So
What do you mean? What do you mean by that? When you say more you put into the contract, can you elaborate a little bit on that for like individuals? Because I know what you're talking about, but maybe like when you say contingencies, they might not know what that means. You
have people that, I have people, the other day I had somebody waive an inspection. I don't encourage anybody to do that, but people are so desperate to find homes that they're doing that. That's a contingency that is needed. In my opinion, you should always get a home inspected, but you have people, like I say, that are paying. I wrote an offer the other day for $10,000 EMD, a $10,000 appraisal gap, and we paid $13,000 over the asking price. You know, I mean, that's how competitive it is in the especially in the Ann Arbor, Ypsilanti area.
Let's just stop it real quick again. He said that they're waiving inspections. I do not recommend that at all. Get and it's, you may think it's an unnecessary cost. Get one.
Brother, you notice I said I do not recommend that as well. I don't recommend it, but you have some people that can afford to do it. I had a contractor he's a contractor. He waived his inspection. A first-time buyer, I would not recommend that you do that. He was able to basically do his own inspection through walking through the house for an hour.
Okay, that makes sense.
Yeah. No, I said I do not recommend that, but it's happening.
Okay. Go ahead, Brother Spears. What's your question?
So when like they waiving the inspection, that means like because it's a cost on it or something?
It is. Average inspection is probably about somewhere between $300 to $500 for your average, depending on who you use. So when you go to purchase a house and you get your offer accepted, generally you have a 10-day inspection period on our contracts. But even that now, I'm reducing the inspection times to like 5 days. People want you to get it going. They want you to be serious. They want to They got 8 other offers over here. When they accept yours, they want to know that you seriously want to buy their house, or they don't want to mess with you. You know what I mean? They don't even want to accept your offer. So you have a period to inspect the house. You can get a contractor's inspection, which really when you're inspecting the house, you're looking for things like mold, you're looking for bad roof, electrical, plumbing, any material defect that can harm you or your family. You have some first-time home buyers that think that, you know, they can go in there and negotiate off of every nail pop in a house. Not working right now. You're looking for major material defects that can harm your family. And if you find them, then you have an objection period where you can go back in and say, hey, I found this, and that. Would you be willing to work with me on the price or pay some money towards my closing costs so I can get it fixed? You know, or any way you guys can negotiate your way out of that.
And that's one of the things too, to piggyback off of what he said. And this is what I was talking about earlier with just being prepared. You want to make sure that you have money in your account so that if things do come up or like stuff needs to get done, that you have the funds to be able to do it. Like sometimes I'll work with clients and that $300 to $500 might be all they have, like where they're like, hey, I can't afford to do an inspection. Well, in my mind, I'm thinking, well, you really can't afford to buy this house. If like $300 or $500 is going to make or break like it's probably not the best time to buy that house, because things are going to happen, right? Like you're going to need a moving truck. What happens if you move in and you don't do an inspection? And you know how it is in Michigan, a month from now, when you purchase a house, the pipe freezes or there's issues that you could have avoided spending $300 or $500 up front for the inspection. So all of that stuff is stuff that I talk about too, with just being prepared, making sure that you have, you know, more than enough money to cover just your down payment and your closing. Because if you end up in that situation and it's where you're literally scraping everything that you can, then you just really need to reconsider if now is the best time to be purchasing a home. People don't want to hear that, but that's, you know, like he said, it's something that needs to be said and something that you have to think about.
Okay. I appreciate it. And I see my good friend Lim's on the line here, who's a realtor as well. So I'm gonna have him jump in too periodically to be able to ask for his input. But one thing I want to talk about that, like we always get, you know, some of our people and our friends always ask, can I buy a house with no money down? So I'm gonna start off real, David's already giggling. I'm gonna start off with you, Brian Cook. Let me know your experience. Manny, then I want you to talk about, from like an underwriting standpoint, like those loans that we could get with either the minimum down or no down payments, like kind of what that looks like from like a risk standpoint. So Brian Cook, go ahead and share your thoughts there.
Yeah, so on our end, obviously, you know, we don't do anything that's zero down unless it's like a VA loan. Quicken is a very conservative company. But I think that at the same time, we do what we try to help our clients and put people in the best positions. Horror stories where people will, like I said, go with a company and maybe they offer MISHDA or maybe they offer like different programs where you don't have to have a down payment or closing. I think you're setting yourself up for failure there. Just because, like I said, if something happens and you don't have any funds, you know, you might end up in a tough position. There are some people that do it and some people that benefit from it. Like I know family and friends that have done MISHDA or have done programs where it's a zero down and it works out for them. A lot of times I get people who, and this is what's interesting with doing refinances, a lot of times, like if you don't have a professional like real estate agent or you don't have someone that's a lender that's, you know, doing right by you in the first place, they'll push you into something just to do it and then their hands are done with it. But a year from late now or a little bit later, when you go to refinance or, you know, your house is underwater because you didn't put anything down for a down payment and we can't refinance you because you have this extra loan that's an extra $7,500 and now you don't have the equity to really maneuver or to do anything, it kind of sets people up for a bad situation. So like I said, we don't offer them. I've heard good things about it where you can do zero down, and I've seen, you know, horror stories where that's the situation. But personally, I mean, I wouldn't recommend it.
Nah, I'll bring it up, and Manny, I'm gonna jump over to you in 1 second, but because you know I'm in the business too as well, so doing a couple things. it sounds nice up front. And for the most part, like I said, for some people, it works out really, really well. But for anybody that's watching this, and if you're trying to go down these programs and stuff, you need to read the fine print. Because sometimes they put another lien on your property. Like I had a client that I tried to help out. Unfortunately, because of COVID, they ended up losing their job. So what you do, you look at whatever ways you can save money monthly. So I was like, hey, he had great credit. They ended up getting another job back, but it wasn't as much as they were making before. But we ran into the issue of trying to help them out that, hey, we can't touch this loan or they're gonna have to pay this cash back right away. Like there was like all these stipulations on it that I was looking, I was like, hey, you're now stuck with the extra $400 a month payment that you don't have. Like you can't take advantage of the low rates because they got their mortgage when rates were like in the 5s or something like that. That was a good rate at the time. But now if we're in the 2s, you can't touch it because we don't have enough room and equity to do it. So real quick, Manny, just because I like to explain the why on things. So me and Brian talked about like what we see as far as like refinancing later, but from like an investor standpoint, people need to understand that people are not just being mean to say, hey, you have to always put money down. Like, why does money down? Why does that give people different programs? Why does that give people different opportunities? Why is the person that putting down 20%, why did their loans close faster than the person that's doing 3.5% with all the seller concessions in the world?
Yeah, typically with folks that are putting less of a down payment down, they are increasing their chances of coming across issues when when the appraisal comes in and you may have to renegotiate, you may not have the funds to do that. A lot of times also, towards the end of the process, that's when title is ran and then they update the balance of fees, the prepaids, all of the fees get added, from the HUD reviewer. That a lot of times can be, a significant shift for some borrowers. And that may increase your funds to close. And that's no bait and switch. It's just a lot of lenders have, programs that estimate these costs on certain things, as far as taxes, transfer taxes and stuff like that, and third-party fees. And once they send in the invoices, then they're able to really balance that that CD or closing disclosure to see what the actual final prices are. And a lot of times that information is estimated at first, and it may, be off, from a couple percentage points or something. But as far as like down payment, it shows your investment as a borrower. The more you put down, the more favorable it is from a lender perspective, as far as the amount of equity or like value you have in the home in comparison to the loan amount against your actual property. That is all a risk indicator from a lender standpoint. So the more equity you can have in your house when you're putting down, when you're buying the home, the better or favorable pricing you may get from a lender. There are a lot of things that are, risk factors from a lender standpoint, but there are a couple main things that, a lender looks at. They obviously look at that ratio from the amount of equity you have in a home, which is like the amount of value that you own in the property. And then they also look at your credit. And then they also look at basically the amount of the loan. So, are they going to be able to collect money on that interest? I know it sounds kind of predatory, but, lenders have to make money in this as well. So they look at, a specific amount of loan, that's a sweet point for them to lend on. If it's lower, they may charge you some money for that. If it's high, jumbos, they charge you for money as well on that standpoint. So there are different things that they look at from a risk perspective. And then also, from a debt to income perspective, that's literally just all of your debts plus your monthly housing payment divided by your monthly income. And from that standpoint, if that ratio is too high from the amount of debts that you have divided by your income, there could be unfavorable, terms. They may need more reserves. They may limit the amount of loan that you may be able to get. So there's a lot of different things from that standpoint. But yes, the down payment does play a part in that, as far as a huge part in the pricing that you get and what overall rate that you get on your mortgage.
Cool. Well, hey, I appreciate it. I have there was 2 questions that are in the chat that I'm gonna bring up, and then I'm gonna open it up for anybody that's on the call right now if they have questions they want to ask our panelists here. So one question that came up earlier was, do you have to wait 6 months for your scores to change on your credit? So any of the panelists, if you want to answer that, I have my opinion, but if anybody want to answer that, say like, hey, does it take 6 months for you to change your credit?
No, so it doesn't take 6 months to change the credit. Credit bureaus usually report every 30 to 45 days on average. So meaning that if you paid something off, it usually will take 30 to 45 days. With some of the things that we have now, for example, with our clients, we can do what's called a rapid rescore, which means that if you do pay something off, if you can send us proof that it's paid off, we like our credit team can literally do a rapid rescore and recalculate your score within a matter of 5 to 7 days with just proof that that's taken care of. So if you do it on your own, normally the bureau takes 30 to 45 days, but you know, if you're working with someone and they can do a rapid rescore, it's like 5 to 7 days. And I've seen like drastic, like 40, 50, 60 point changes, depending on what it is, just in a matter of like 5 to 7 days.
Great. Cool. So what I'm gonna do right now, like I said, I'm gonna open up the floor. I have some other questions that are back here that people sent in beforehand, but if anybody that's on the call has a question for our panelists, the floor is yours. You can either raise your hand or unmute yourself. But yeah, go ahead. Don't have to be shy. You can ask the real questions too. You won't bite.
What kind of interest rates are out there right now?
Ooh. B Cook, I'll let you answer that one.
Yeah, I was about to say, Cook, you go ahead and answer that.
B Cook, the mortgage banker.
Bro, you are too, for sure. But I know you're trying to moderate her, so I got you. But most clients right now, interest rate wise, are locking in, from what I'm seeing on a day-to-day basis, somewhere in the upper 2% range. So I call it anywhere from maybe like 2.6 to maybe 2.7 up to 2.99 is where average, like most of our clients are locking in at right now.
30-year fixed.
That's my worst. That's my worst for Master. When you got an 850 credit score, you know those interest rates don't count for people like you, sir.
Well, you know, I made a decision. I'm not buying in Michigan.
Wow.
And that's one of the things too. Like a lot of people think that like it's like on a like state to state type thing too. The rates are universal, so it's not like it's, hey, state of Michigan rates are 4%, and then in Texas it's like 2%. The rates are all the same.
Yeah, I'm with you. I just didn't know exactly what they were running.
That's fine.
For sure.
But that's what we're here for. We're here to ask questions.
Yeah.
Anybody else have any additional questions? Go ahead. There's no topic off subject.
Hey, this is I got a question, Brother Barrett.
Go ahead, Lim, and then Past Master, I got you, sir. 1 second. Go ahead, Brother Lim. Go ahead.
As you know, Detroit offers, land bank property that you buy for $1,000 or whatever the price may be. So like for a person that doesn't have the best credit, can't get approved, but has some cash from, who knows, maybe a gift from their aunt or grandparents, would you say buying one of those properties, waiting a few months and doing a refi on that, is that something good to make them, or put them in a position to get the home they may actually want if they can get some equity out of it?
So B Cook, give me 1 second. So David, I have a question. If you can tie in, just because you've done the real estate and understand some of the risk factor, and then Manny, if you can jump in right afterwards, because I think both of them answer will give you like a well enough rounded answer.
Can you repeat your question?
So buying a land bank property, you got cash because you can't, but you can't get approved right now currently, for a mortgage. So you buy the land bank property, put that cash into it, and then you fix it up and then try to do a refi at some point in time. Is that a better way to go about getting the property that you eventually want, maybe down the line, since you can't do it now, to help give yourself time, build credit, build some equity, have something to back if you do the refi to that property?
I mean, I can see that as a plausible way of getting where you want to be. I mean, if you have the cash to put the money into it to bring the value up in the home, and the credit score to refinance it, I mean, it's a win-win situation.
Okay.
Go ahead, Manny.
I definitely agree with David there. Just make sure that you're taking your due diligence up front. You know, maybe get an appraisal, you know, ahead of time. But potentially, you know, bring a contractor in there if you are taking on a property that, you know, does need some work. You want to make sure that it's, you know, able to be the equity is able to be tapped into once you to go to refinance, because what you bought it for goes through way less red tape in stipulations and regulations versus you going to a lender and then getting a loan. They have to sell that loan afterwards and meet investor guidelines. So they're going to have a lot more rules as far as the condition of that property and how it needs to be for them to actually lend money and give you that money back.
Cool, thanks.
Pass master, I got you, sir.
What differentiates earnest money from a down payment? I mean, what's the difference between the two?
Go ahead, David. That's your ball.
Your earnest money deposit is basically an upfront deposit that is telling the seller, "Hey, I want you to take your house off the market for me. I'm giving you this offer in earnest that I'm really going to go through with this. I'm going to inspect the house and I really want to purchase it." So it gives you an opportunity to win that offer, and it gives the seller an opportunity to yank that money if you default on anything within that contract, though. So you got to be careful. And normally your earnest money can be protected all the way through your appraisal, you know, or however your contract is written. Now, people's contracts are different, but in my contract, like, I can protect your earnest money deposit through your appraisal. Once you and the seller agree to sign off on the appraisal contingency, if the appraisal comes back high, great for you. If it comes back low, great for you. You can ask them to lower it. They have an opportunity to say no. They can walk away and put it back on the market, but I can still get your earnest money deposit back. And at the end of the day, it just comes out of your closing costs. It goes towards your closing cost, and it's however much, you know, less the MD that you put out at closing. That makes sense.
So saying, oh, go ahead. I was saying, so let's say if your total closing cost is $10,000, you put down $1,000. When the loan closes, you owe $9,000. That's the way it works. So it's not like something. I've heard people where they're like, their realtor's trying to get money out of me. I was like, the EMD doesn't go to the realtor. Like, it doesn't go down that route. Now I do. Go ahead, Malcolm.
So generally, it's like 3 to 4% of the purchase price. I tell my clients, you know, to put a decent amount. It makes you look serious. It makes it look like you want to buy.
That's what I wanted to reiterate. It's your commitment, you know, to not showing that you're serious about this and that you actually want to, you know, go through business with a realtor or, you know, buy a home. Like, don't try to skimp on, you know, getting out of set, putting down an earnest money deposit. It is your sure right to, like, hey, I'm committed. I want to do business, and I'm not here to waste anybody's time. It's the best way to get a realtor invested and to show that you're serious. The second way is to have all your W-2s, pay stubs, and everything ready and get conditionally approved and show them that you're ready as well. But yes, it definitely fully goes towards your funds for purchasing the home. It's not something that is separate, you know, like for a fee for a realtor or anything like that. Like Steven said, it can be fully applied to your down payment.
Okay.
I have a good question right here that's in the chat. So either Lim or Brother Malcolm, if you want to answer this, it says, after we see a house before, I'm able to bid on it and it changes to pending. Is there a way for my realtor to know if the bid falls through so they can put a bid on it?
Lim, you want to take a shot at it? I don't want to be a big mouth here.
Oh, no, I mean, you can go ahead, but typically if it changes to pending, because I've had this happen a lot, literally I'd set up a showing for a client and we walk up to the house. I go back home to go put in the purchase agreement and it shows pending. So what you can do is typically I do contact the agent via email, text, phone, and sometimes they'll have, we're taking backup offers or secondary offers if it goes through. So typically just have to kind of monitor it. It depends on the patience level that your client has too, because sometimes it's just like, well, I just move to the next one. So I mean that's typically what I do.
And also, your realtor, I mean, me in this market, when you have that happening a lot, I write up a lot of offers before I even go to the property, and I just don't fill in the amount. And I use DocuSign, and I allow my client to fill in the amount. And if they want the house right then and there, I will press the button on my phone. It'll send the contract to them, and all they have to do is sign it, and we get it over while we're standing there.
I'm gonna have to borrow that from you because yeah.
Hey, man,
hey,
I'm just, you're a good looking brother. I don't want to be sharing all my secrets here, but you got to be up on it. If you want it, you got to do it.
No, absolutely.
Thank you for that. And brother Westbrook, I think you had a question. My apologies, I cut you out there earlier.
Yeah, I did. For the down payment, being a veteran, they recommend us not putting money down. So I'm trying to get the gist of how it's good in one way, but they're pushing us not to do that. And the second part of my question is, I see a lot of homes that's torn down and rebuilt. Is there a difference from buying a home? I'm not that is if it's a difference, there's an obvious difference, but what is the pros and cons of tearing down a home and rebuilding? Do you get more money for that?
So there's a two-part question. Brian, if you don't mind answering about the VA in the down payment portion, and then we'll swing back around. So if anybody else want to answer the second question, because I haven't personally dealt with that, but I'll lend to like Brother Malcolm or Lim or somebody like that or Manny to be able to help out.
Yeah, so from that aspect of it, the VA, that's absolutely right. You can do 100% financing, so no down payment. But the VA loan is like no other loan that is out there. It's not like an FHA or conventional or anything. It's something that's specific for veterans. And it's a way that they basically say thank you for that. The VA is the one that, instead of you putting a down payment, since you were in the military and you had honorable discharge or whatever, they're willing to take on that slack or that risk of you not putting the down payment down and, foreclosing or having an issue like that on it. So it's a completely specific program with specific guidelines only for veterans. One misconception too about that is that, so it's 0% down for the down payment. Typically you still do cover your closing costs and then your escrow too. And then also the better the credit is, the better chance you have of getting approved for VA. Just because you have a 620 doesn't mean that you automatically can just do like 0% down for the VA. They still have some stipulations and some guidelines where they want to see it. So for instance, what I've been seeing a lot of lately is you need to have at least like a 640 for them to approve it with 0 down. If you don't, it might request 5% down, or it might request, a little bit of money down, or might request you to do a 15-year versus a 30-year. So I would say there's a lot of different niche programs like that. For instance, there's some like professional loans where people who are like doctors or people who are attorneys or whatever, certain banks will bend the rules or bend the guidelines to specifically fit those kinds of things. So when we say like the lower the down payment, the less chance that it's going to go through, that will be more so of like a conventional loan, which you don't have to be a specific genre or a specific, like, I don't know, for lack of better terms, like person to be able to qualify for it.
And on piggybacking off of that, can I use that as along with other like first time home buyers and everything else that, or am I just pigeonholed to that VA loan?
So I mean, I guess different lenders would have different things. I don't know for sure that you can stack like different types of like programs. Like for instance, I don't know if you can do MISHA or like some type of assistance program on top of a VA loan. Each lender is going to have their own like overlays and guidelines that they have for that. But the VA loan is usually just kind of a strict, just standard VA loan, 0 down, no PMI, that type of thing. So I can't speak to every lender. There may be some lenders that do allow you to kind of like double stack benefits and things of that sort. I personally don't know.
I recently, I got a contract right now, a house under contract, and it's a VA contract. But it was the one that I explained earlier, where they put the $10,000 EMD down.
Okay.
They offered the $10,000 appraisal gap, you know, should there be any shortfall with the appraisal, and they actually put money down. But the sellers were a little scared to accept that offer because it was a VA mortgage and the things that come along with that. It's sad that veterans have to go through that, but yeah, it was kind of weird to me. That was the first time that I ever had a VA client that had to put that kind of money up front in order to get their offer accepted. And I haven't closed it out yet. I plan on closing it out, I think in about 2 weeks or so, but it was very interesting having to do that because I've also had VA clients who've gotten money back at the table for concessions and all kinds of stuff and didn't really put anything out.
Right.
So to your point, I think too, David, like that speaks to the volume of like the magnitude of where we're at right now. Like, 5-6 years ago, when there was a buyer's market, sellers were more likely to accept, different kinds of things. But where it's a situation now, like you said, where it's a seller's market and you put a house on up and there's 10 or 15 offers on it, like the sellers got clear pickings of what they want. So a lot of times they are going to accept an offer that has 20% down or that has like a larger down payment because they feel more confident and, a person's more vested or invested in the deal, if they are putting down a larger down payment or earnest money deposit.
Now, he had a second part of the question that I'm interested in as well, because I'm not really too familiar. Like they see all these houses that you can buy like for the back taxes and then trying to renovate it or something of that nature. Did anybody on the panel have any experience with that or any situation? I think, Lim, I feel like you did something close to it, but don't quote me on that. But like I said, if anybody on the panel has any information or insight or any good advice for the brother.
I would just say do your due diligence, researching programs ahead of time. If it's a rehab build that you want to do, there are programs out there, but sometimes they can be much longer than the normal process. Especially those, I think 203K loans, those take some time and they're very specific on the requirements and things that you can do. So you have to be knowledgeable about those things. You can't just look for a professional to tell you about it. Be invested, do your Googles, do your research, and look at, if that program makes sense for you. Currently, Quicken Loans has a renovation product, but we're kind of phasing that out. I don't know if we currently offer that to our clients right now. Ours is we're not offering it. We used to have one where you would qualify as normal. We would set an escrow account, which kind of holds the funds. And then you then get the funds dispersed. And as long as it's with our contractor or approved contractors to do the work, we then disperse the money out as follows for completion of the rehab. That one is a very unique. That's not how the FHA one is done. Typically, they make you complete all repairs, then get an appraisal to see that value is withheld with the improvements. But overall, those can be a long, drawn out process. I would not recommend those unless there's a lender that has a staple program that has done these. And I would really probe into making sure that they are successful with those and doing them, because it's one thing to get into it and start doing those things, and then you run in with a bad contractor that does some shoddy work, and then the lender's not willing to give you the money, so you got to make sure you're doing your research and just being educated on that process thoroughly.
And some of those, I wanted to talk about this earlier too. I'm glad we kind of circled back. So like with the land bank deals, like a lot of those, they'll have it where you have only a certain time frame to be able to rehab it, renovate it, get it up to code, where they take that property back. So imagine, I think they give you, it might be like 6 months or like 12 months or something like that. But, you know, imagine going into it and you don't think that there's going to be a ton of work that's needed. You start investing money into it. First, you buy it from the land bank for $1,000 or $5,000 or whatever it is. Then you're pumping this money into it. And for whatever reason, you run into something that you weren't expecting. And all of a sudden, you don't have the money to be able to repair it or to fix it in that time frame. The land bank comes back and takes that property with all the work and all the money and stuff that you put into it, and they're just gonna turn around and sell it to somebody else. So that's, you gotta have your ducks in a row if you start to do that kind of stuff. It's not as easy as people think that it is, or just, hey, I'm gonna buy this house for $5,000, put 10,000 into it, and then, you know, I got a $50,000 house or $100,000 house. It very rarely works out that way.
Yeah, so with that, if you build from scratch from an empty lot, can you get a home loan for that? Is there a
Yeah, you just get a construction loan. So you just find a lender that does like a true construction loan, and that's how you would do it.
Yeah, and the biggest thing there, Quad, is that like you get with a reputable builder, you know.
right, for sure.
You
They
gotta
got
make
plaques,
sure.
and they got stuff on everybody's line with this one builder who to build their house.
Yeah, exactly.
Yeah.
Make sure you're vetting them out, because just like you're vetting out the lender, making
Right.
sure they're on their P's and Q's and stuff, you have to do that same thing with the builder. Hopefully they have a development, you know, multiple projects going, things that they can show, you know, what they've done, you know, prior.
Exactly.
You know, that's good. But yes, just do your due diligence vetting those builders, because they can and you know, biggest thing with those two is, you know, making sure that, you know, when you take, you know, that execute that contract, that, like, you know, that's majority of the funds up front. You know, they're not nickel and diming you and bringing up all these other costs that like you have to incur down the line. You know, get a contract that explains everything thoroughly up front and what roadmaps you're going to hit along the way and where you could potentially come out of pocket of additional cost.
So if I could, to Brian Cook's point, I want to play devil's advocate. With the land bank, you do have 6 months to get the property in what they call, I guess, a livable or rentable condition. I personally have dealt with them, and what I've come to find is that they do like working with veterans, because if for some reason you get orders, you can send them to them and they will give you a 2 to 3 month extension. In addition to that, if you find out who your case worker is, typically you can work with them, and what they typically look for a lot of the times is updates. They just want to make sure you're actually doing something to the property, make sure you're actually fixing the things that they have on the list. So prior to even getting the purchasing the property or bidding on it, you again have to, like I said, do your due diligence. You want to make sure if they have a day where you can inspect the property, go do that. You know, they have days set up where you can go look at the property, view it before you actually bid on it. And most of the properties they have on there will already have an inspection report showing everything that's pretty much wrong with it and the cost that, like a list of work to show the cost of what it would typically take to get that house back into a livable condition. So I've worked with them and I found that out. So, I mean, it can be case by case. Don't quote me on that saying that it's going to happen every time. But I know in my personal experience, I've been able to get extensions. And yeah, they're pretty easy to work with once you learn how to work that system.
Yes.
See, but hey, that's why we're here, to give these little nuggets. Now, I did have one question that's in the chat, and then we'll take a couple more from the floor, and then we'll get things wrapped up. But it says, I've been approved by 2 lenders for 2 different amounts. I want to go with the higher lender, so I'm assuming the higher amount because the interests are the same. How can I get my interest lower? They're both FHA loans. Now, before we jump in there, this is one of my big pet peeves. I used to be a purchase banker. Now I do both. What you got to do is sometimes ask what's going on with it, because sometimes there's things that are structured in a manner to be able to help you out. So one lender might have a rule with like student loans or something different that they're working with that doesn't allow you to get qualified for a certain amount. And then two, I've had it where people are like, oh, I already paid that off, but it was still in their credit report, which was stopping them from getting to the approval amount that they want to go. So if you don't give the same information to both people, that's how you get two different amounts. Also too, I will just ask, like, just go up and ask, like, hey, I need a lower interest rate. See what happens. I know this is not going to be the popular thing to say, because I am a mortgage banker. I deal with this all day, but literally just ask. That's what I expect like my clients to do. And like I said, I'll walk my client through. Like today, I had a client earlier. They was asking why we were doing like a 299 versus a 2.5. And I just showed them the difference in the cost. And I was like, you only plan on keeping the home for another year and a half. So it doesn't make sense for you to pay the extra cost. You don't get your money back. He was like, oh, that makes sense. I was like, cool. And we just kept going about our day. Because I think people sometimes think that like the lenders out there's like most of the time trying to get you. And the big reputable ones and stuff that go on, that's not the case at all. You know what I mean? Most places we might not get paid off the interest rate, so they don't really care about it. But you just have to understand, like, hey, just ask the question. And then depending on that answer, I can tell you too. Maybe the other lender, when you ask the question about it, the way they responded to you, you might not like them, might not trust them. Then you end up working with somebody else. You know what I mean? So I just want to kind of give that information here. And then I want to open it back up. And then, while you guys think of your next question, before we close it out, I personally have to bring up something for my good friend here, Mr. Malcolm. Why do you feel that somebody actually needs to solicit the services of David Malcolm instead of them thinking they can go online, put together a purchase agreement from like Google? Because you can find them. You can get a purchase agreement any day, and you can submit that. You can submit that purchase. Why do you think somebody like a Stephen Barrett, who's in the mortgage industry, actually used the David Malcolm to help him buy a house, even though I do loans all day and I do home purchases all the time?
Hey man, I'm a go-getter. I'm a hustler. I'm sorry for it. It just is what it is. If you want it, I'm gonna go get it. I take pride in trying to, make sure my clients are satisfied. I don't care about money or anything until my clients are happily in their home. Like I said, I have great relationships with a lot of realtors around this area. It makes it a little easier to get things done. I've had people like accept offers that weren't as good as other offers because we have great relationships and they know how I work and they know how I do things. So I'm a client first realtor. Your interest, I mean, is everything to me, and I just want to make sure that I take care of you, and hopefully you'll send somebody else to me. And have good things to say about our transaction and your time with me. And like I say, I'm a go-getter and I know how to do it. I know how to get it done. I want to make sure my clients are first in. I want to make sure their offers are first in. And I'm going to always tell you what you need to know, not what you want to hear. Sometimes that can be brash. Sometimes it can be abrasive, but that's just my personality. So at the end of the day, I'm going to tell you what we need to do to get it done. And if you check out my Zillow reviews and whatnot, I didn't force the hands of those people to write that stuff, but I got some pretty nice reviews in there from my past clients. And I have great relationships with 99.9% of my past clients. There's a couple that don't like me, but hey, can't please everybody.
I mean, it's the nature of the game, man. Even Disney World has some issues.
Another
Brian Cook.
Yeah.
Yeah, I was gonna ask you because your wife's a realtor, so you you see both sides because you're a banker and your wife's a realtor. So like, add in why they need to get a realtor.
So I would say it's two things too. So one misconception that I always get with like a lot of first-time buyers is they think that they, as the buyer, pay for the real estate agent,
right?
Which is not the case. Like I've literally had clients say, "Oh no, I want to do this by myself for sale by owner. I don't, need to have an agent. I don't want to pay for an agent." The agent is always paid through the seller on the sale of the property. So the way I always explain it to clients, it's like, okay, say you're going to court, for instance, like there's a defense attorney and then there's a prosecuting attorney, right? Like the defense attorney is your real estate agent. They're the one that has your best interest in mind, that's trying to get you the best deal. Whereas the listing agent signs a contract with the seller to basically do the best for the seller, to try to get the most amount of money, to try to do, the highest for the seller. So you always want somebody in your corner And you want that person to be a professional and to be good at what they do, but most importantly, they represent you and you don't have to pay them for it. Like and there's a lot of things that come up just with real estate lingo and contracts and all kinds of things, where if you're not in there every day and like doing it every day, you won't understand a lot of it. There's some things in contracts I look at, and I've been here 10 years, that, I don't necessarily understand. Like this whole appraisal guarantee thing is new to me, where I had to have like my wife and agent actually break it down to make it make sense for me, which is, I mean, I'm in the industry, so just a novice or someone who doesn't deal with those kinds of things, you're going to be lost. So 100% it makes sense for you to get a real estate agent no matter what.
And to piggyback kind of what you just said too about realtors, it's also incumbent upon you as a buyer to be loyal to your realtor. You know what I mean? I've had situations where I showed somebody a house and 2 hours later I got a contract on the house from another realtor with the person that I showed it to. You know what I mean? I'm not out to hurt you. We're not out to hurt you. But if you have someone spending their time taking you out and showing you homes and driving all over southeastern Michigan to help you, understand that, that person is taking their time out to help you out. And there's a little bit of loyalty, owed by you as well. Like, it can be a very rewarding mutual relationship for the both of you.
Cold-blooded, man. That's cold-blooded.
Oh no, bro. I'm telling you, me being nice, I don't always make people sign exclusive agency agreements with me. If somebody sends me somebody, I'll take them out. And that using 2 and 3 realtors, it's just not cool. You know what I mean? It's not fair to the people that are out there working hard for you. So literally, I've had things like that happen, and people close to me. That guy was close to me that did that to me. So, or you find out through an email, hey, my new address is such and such. I want you to come over for a housewarming party. Be like, yo, bro, you just gave them $13,000, man, and I helped you get the money. I showed you 20 homes. So be loyal to your realtor too.
And your mortgage banker. It's the same thing.
And your mortgage banker and your title people. All of these people are working on your behalf to make your life what you want it to be. So, it's nice to be nice to them. So
100%.
Yeah, I like it. So, hey, before we wrap up, does anybody have any other questions or any other comments that they wanted to bring in? Like I said, we're here for you.
Just a quick question about appraisal. Let's say you get an appraisal and the appraisal comes back that, hey, your house is worth X amount of dollars. Is your house really worth X amount of dollars, or is it just that appraiser's opinion that your house is worth X amount of dollars?
An appraisal is definitely an opinion, but it's an opinion that sticks.
Yep.
Yeah, it's supposed to be like, I mean, in a perfect world, it would be like, subjective, where it's based on, or objective, I guess I would say. I always get those mixed up, but where it's based on like numbers and like what's sold in the area and all those things and comps. But a lot of it is opinionated. And I've seen it where we've had 2 different appraisals, go to the same house, and the house appraises $10,000 difference or 15 grand difference. So realistically, I mean, it should be something that's based on like comps and based on, specific things, but it's completely up to the appraiser's opinion.
Okay.
Cool. Thank you, Past Master. Any other questions, comments, concerns?
Thank you for hosting this today. I really needed this. I got some valuable information that's going to help me move forward in this process. It don't seem that bad after all. I think you had everybody here that I definitely can use moving forward. I know it's good when I see Brother Manny on the line.
What's happening, man?
So no, man, we're here for you, man. I'll pass their information to as well. I'll be able to send that out for anybody. So you guys in the chat, so like Brian Cook, David, and Lim, can you guys put your information in the chat? I'll keep it up for a little bit so that people can get a hold of you. And then what I'll do is I'll work on when we send this out to have that information present too as well. But what I'll do is, again, I want to thank so much the panelists. I know I texted and called you guys late in the middle of the night, like, hey, this is something that I want to do, getting ready for like purchase season, quote unquote. And I just want people that look like us and around the country to be able to be best prepared, or at least have some questions, some ideas, so they can just reach out. They know to get a realtor, they know to ask these questions, know to have a down payment. They know to fix their credit, so they'll be in a good spot. So without further ado, again, thank you guys for your time.